What's up, everybody? Welcome back to another lesson from High Performance Trader. Today, I want to break down a beautiful example of our three-step criteria, right? It happened over here on July 12th, right? So we were live on the Discord this day, right? And in this video, I want to break down how we approach the market, our pre-market plan, right? Basically, my system, right? My process. My process is a set of rules and principles and precepts that I use every single day to get in and out of the market, right? And when I'm talking about principles, I'm talking about there's certain laws, right, that when implemented, no matter what, you're going to get certain results, right? Like universal laws are one of the coolest things in the world, right? Something like gravity, right? It doesn't matter who you are, gravity applies, right? You could be in China, right? You could be in New York, you could be in LA. Doesn't matter if you jump off that roof, you're going to die, right? You're going to fly and plunge straight to the ground. And also, it doesn't matter what sort of type of person you are. You could be black, white, purple, brown, 300 pounds, in shape, doesn't matter. Gravity applies. Same with heat, right? Heat's another one, right? Where if something's on fire, right, and you touch it, you're going to get burned, right? So you don't break the rule or the principle breaks you, right? And there's tons of principles in the market that we have to learn, become aware of, and abide by if we want to get the results that we truly want, right? So today in this lesson, we're going to break down our approach, how we approach the market, right? And if anybody wants to take it one step further and get involved with our team, guys, click the links below, right? It's you cannot keep wasting time, right? If you want to get the results that you want in this game, you're going to have to work with a team, right? A group of traders, and get that sense of accountability, that camaraderie, right? You're going to need a team that you can rely on, right? A team that's going to push you to grow. High Performance Trader is that team. So click the links below. We got Trader Bootcamp, right? We got live webinars. We trade live every Friday, right? And every single day we're posting live in the commentary, putting in the work, right? And also I'm working on a new entry indicator that you guys are going to love. And I want to break down some examples today in this lesson, right? So the day we're going to be talking about over here is 7/12/2024. So my first thing I'm going to do, and this is my first principle, is identify market conditions, right? And the way that you do this is you whip out the 1 hour time frame. The 1 hour time frame is going to show you, right? It's going to give you the overall context that you need to make a move, right? And a lot of these tools that I use, right, like the moving averages, the critical levels, the market structure, these tools I use every single day, right? Because we never know what the market's going to do, and it's easy to talk about once it's done. But if you develop a set of criteria that you could look for and watch, right, and then when you observe that criteria, boom, that's your reasoning for entering either bullish or bearish, right? So once again, I whip out the 1 hour time frame and I go, okay, what can I see, look at, or observe that's going to help me determine a bullish scenario or bearish scenario, right? Approaching the market non-biasedly is the most important factor of trading. If you cannot approach the market objective, meaning you're not assuming shit, right? Excuse my language, but it's extremely important. You cannot assume anything in this game. You can only observe. You must be objective, right? Non-biased. I don't want it to go up. I don't want it to go down. I don't think the world's ending and I'm only going to short the market. No, I'm going to play the information that I'm seeing. That's it, right? Now, one way I like to do that, moving averages, right? So we're going to start there. 1 hour time frame. Notice this purple line right here. That's the 50 EMA, right? I love this tool. It's a fantastic tool. Why? What do moving averages do for you, Josh? They help me determine the strength of the trend. It's literally that simple. When you're above the 50, you're rather bullish. That doesn't mean only go long, but it means I'm going to refrain from shorts. Also, if I'm below the 50, like we are right here, that doesn't necessarily mean go short, but it means I'm going to need to see a little bit more from buyers to put on a long. And that's exactly what's our plan. My bullish scenario is any acceptance above the 50 EMA, right? I was looking to target 55930, 56130 in previous day high, right? So number one, moving averages. Number two, your critical levels, right? Your critical levels hold all the volume, right? And this is literally a direct result of the market auction. When and how you understand how well the market auction, why it works, then you'll be able to make way more informed decisions about the market. Meaning, if that 50 EMA holds, it really only makes sense to see previous day high, or at least 56130, which was the previous end of day, right? These pint numbers hold all the volume, massive amounts of it. So for large money to make money, they need price to gravitate from high volume area to next high volume area. This is what we call the market imbalance, right? Critical level to critical level. And you can see, guys, price literally rallied to previous day high. Of course it did, right? Because that's what makes sense. It's the principle, right? Bring it back. The laws, the principles that govern the market. Liquidity is one of them, right? The smart money concept is that for large money to make money, they need to take your money. And the way they do that is by pushing price between critical level to critical level. They really can't make many moves outside these levels because these levels hold all the volume, right? And I don't have time to get into it, but for every transaction they make, they need an opposite transaction, right? That's the law of polarity, right? Once again, it's crazy, guys. Once you start to learn the universal laws, you see them all over the place. This is another one, right? The market every buyer needs a seller. Every seller needs a buyer, right? As high as something goes is how low something can go. And then once you start to get that imbalance of supply and demand, that's where you get your trends, right? So once again, that's just one way I like to understand what I'm actually looking at, right? So we have moving average, that was the 50, and then we got our targets, which are up here. That's in a bullish scenario. If buyers cannot hold the 50, I'm looking short down to PDL, right? So at that point, I'm looking for a move from open print, which is the open bell price, down to previous day low or end of day, right? Okay, cool. So now we're going to whip out the 5-minute time frame, right? I'm going to keep the 5-minute right here. Actually, we're going to dive into the 2-minute, right? Because the 2-minute was the one that we used to actually put on the trade. So once again, I'm looking for acceptance above that 1 hour 50. And another way to determine strength, right, is I need to see acceptance off the 50 EMA. If it's on the 5-minute, that's great. If it's on the 2-minute, that's great. Once again, I don't get super analytical about time frames. I like to be like water, just like Bruce Lee said. You need to be formless. You need to be able to understand this is what strength looks like, right? And then you need to then make the move. How do we do that, Josh? What's your criteria? What's your process, right? It's going to be open print. Open print is going to literally paint a picture for the open, right? And what I mean by open print is that first candle, the first print of the day, right? So if I pull up the volume over here, you're going to see, look at all the volume that goes into the opening bell. Massive amounts. So if we're seeing a spot with tons of volume, boom, we're seeing large money. We're literally seeing what they want to do for the day, right? Now, we don't just long the first candle because it's green and it's the open. We then wait for structure to form, right? I need to see the break. I need to see the retest. Look at the retest here. It's phenomenal. It's beautiful. But not only that, I need to see a healthy relationship between price in the 90 EMA, which is the blue line, the EMA cloud, which is the 9 and 20 EMA, and then, guys, my personal favorite, the 50. The 50 EMA is going to help guide me, right? Because look at it. You literally need to be able to look at the candles and be like, what's happening here? Look at all the wicks going here, 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 here. They're rising, right? That's one sign of strong bullish conditions. What's another? We're getting a higher low right here in pre-market, right? And at the open, right? We get a low in pre-market, right? Look at, we get a low here, then we get a lower low, that's bearish. Then we break structure. We also break the 50 EMA in pre-market. Now we get the higher low, right? Sellers trying to push price down, buyers not having it. What happens? We get that beautiful strength, that beautiful structure here off open print. We take the market long on this 946 candle. Why on the 946 candle, Josh? Well, look at how price reacts to open print in my moving averages, right? Look at how price is wiping out the top of the previous candle. This is very important because what this does is now creates a perfect area for me to stop out of, right? See, I can't just long this candle or this candle. I mean, I could long this candle, but if I want to wait for the market structure, if I want to wait for my criteria, again, right? Critical level, market structure, moving average. I'll say it one more time. Critical level, which is my pit numbers, pre-market high or low, right? It doesn't matter. I really like to focus on the pit numbers, which are the previous day high, low, open, and close, right? Then we got, that's open print in this scenario, right? Now we're getting the market structure I need to see. What's market structure? The break, the retest. The bullish conditions are forming. Sellers are getting squeezed out of their positions. That's literally what we see when we see a break and retest, right? And then number 3, my personal favorite, the healthy relationship between price and the moving averages. This means I cannot be extended, right? I can't be super extended from price. Like you could see right here, see when we get very extended from price, right? We literally soak back up into the moving average, right? It's being extended doesn't mean reversal, but it usually does mean some sort of pullback. And that helps a lot when it comes to profit taking, right? But that was our entry right there off open print. Our first target was right here at 559.30, right? We hit this trade. It was absolutely beautiful. And then we ended up re-entering in the trade because the conditions never shifted. And then we got this breakout right here, right? I want you guys to be able to see these, right? Market structure forming, right? So it was a beautiful morning, right? We had a phenomenal day trading. But guys, once again, we used my favorite 3-step criteria, right? One more time before we go, we got critical level, right? That's the law of liquidity, areas of value in smart money concept. Then we got market structure. That's the law of communication. That's how the market communicates to us. It's through a structure. When you're seeing structure, you're literally seeing traders getting squeezed out of the positions. And number 3, moving averages. That's the law of strength, right? Or relativity, right? How price is reacting to the trend, measuring the strength of trend, right? Guys, I hope you love this video, right? Dive into your universal principles, right? We got a whole course on it in Trader Bootcamp. If you want to take it one step further, I'll see you there.